Mode.
Okay, I want to thank everyone for coming. Just real quick, if everyone can put up their hands if they can hear me. Just want to check that real quick. Okay. Okay, great. People can hear me. Okay. This is Andrew from trendfollowingmentor.com, and today's webinar, we're going to be talking about trends. Everyone wants to know when they begin and when they end. They think it's this secret formula when they begin and end. And I'm going to show you a way to actually know. Before we start, there's always the proverbial disclaimer that must be presented. And I'm just going to leave it there for 1 second, just so you see it. And the main issue is that past performance is not indicative of future performance, and that we're going to talk about some things that might even be some hypothetical examples. While Metastock is loading, I'd like to add the fact, I also want to invite you all, that I have a book coming out in the fall that's being published by Wiley Books, and what it discusses is exactly how I trade. Besides everything how I trade, I discuss all of the attributes, or I'll call it the secret sauce, in order to be successful. And really, it's not the magic system. It's not the magic indicators. It's putting it all together. And that's exactly what we're going to talk about today, is like putting it all together. It's more than just beginning and ending of trends. I'm going to say this to probably everyone's disappointment who's here and listening. There is no exact way to predict a trend. And you know what the fact is? You don't need to. In order to be successful and profitable, you don't need to. And I'm going to talk about that in a little bit later when we start getting into Metastock. And the methodology that I teach and the methodology that I use in my trading really is the secret sauce. It's a simple, robust methodology combined with risk management, combined with, I feel, is one of the most important issues, is how to think as a successful trader. Thinking as a successful trader is what's going to make you long-term consistent and give you the propensity to compound money, which is, if there's a secret sauce, this is part of it, is the compounding of money. The idea that when we take a trade, because the idea when we take a trade, we're attempting to catch something trending, either moving up or moving down. And really what we're trying to do is we identify, and I'll show you how exactly we identify the strongest markets and the weakest markets. And then once we identify them, what we're, let's say, making a small bet on is that, and I'll put in parentheses, possibly they're going to continue. Because again, I would say the majority of investors want certainty. And the reality, when we trade, the only certainty is uncertainty. So taking that into consequence, this is part of the idea of how to think as a successful trend follower. You know, it's like I've spoken to students, and one of my first questions I ask them is, I say, when you put on a trade, do you think the trade has to work? I'll even pose it to you now, the people that are in the webinar. When you put on a trade, do you think it has to work? If you just show me a raise of hands that you think it has to work. You're putting your money on the line. Do you think the trade has to work? Okay. Some people say yes. Well, that's interesting. Okay. The idea that we're doing is that, let's say, the secret sauce, or the most important issue, is when you're taking low-risk bets, instead of searching for a Holy Grail trading setup or a Holy Grail formula or system, you're on your way to start compounding money. And I keep on talking about compounding money. This is one of the main issues. There's several issues. Realistic returns. When I say realistic returns, and again, when I've spoken to investors and other traders, people think they deserve 30% returns. And it's ridiculous. If you can do 30% over several years, you'd be managing so much money that you can buy your own island or your own yacht or a plane or whatever. When I'm saying realistic returns, if you can average, on average, not every year, 15% over long periods of time, and you have long periods of time, and you let the power of compounding happen, you're going to have a lot of money. You will create extreme wealth. To qualify this, 15%. 1 year, you might do 10%. 1 year, you might do 20%. 1 year, you might do 5%. And then another year, 28%. The idea is you stay at it. You grind it out. You stay in this marathon. And it's not easy. And you stay in the game. I spoke about formula for creating extreme wealth. Reasonable returns, like I just said, 10, 12, 15%, and every percentage point is extremely important over time because you're compounding. The other issue that you need is time. The fact is, I started when I was 32 years old. I had sold a business. I'm turning 50 soon. I'm getting old. I've been doing this 18 years. I know what it's like to compound money. This power of compounding has exemplified my net worth. The fact is, I'm not doing it just for myself. I'm doing it for my children. My children, I'm teaching them. My daughter, when she was 12 years old, she started learning about this. My son, when he was 13 years old, he started learning about trading. My daughter at this point, I call her the ice woman. There's no emotion. And you know what the fact is? When we trade, the biggest detriment that we have is the emotions, the fears, the greeds. I'll give you a quick example. When I teach, I've taught people from Australia, from Tennessee, you name it. The fact is like this. I had a student in Australia, and he had a great trade going. And one of the things that I teach on one-on-one is I want to see all your trades. Let's critique them together so we understand. Did you follow your plan? Because I help you build your plan that matches your personality. Well, the fact is, he was in a trade. It was working. It was working a long period of time. It was several months. He closed it. And I asked him, I said, you know, why'd you close it? He said he got bored. And I was in shock. But it really didn't shock me. He didn't keep to his rules. If you don't keep to your rules, you ruin the potential of compounding money or creating wealth. I've had other students. They had a nice profit. They took it. And then to their dismay, it kept on running. They didn't follow the rules. The hardest point is following the rules that you set up. This is so much more important, excuse me, than people. They search for this elusive holy grail of magic entries or magic exits. It's not the point. You know what the magic holy grail is? These issues: a reasonable return, time, power of compounding. This isn't my beautiful words. This is Albert Einstein's beautiful words. You add up these attributes, you get one thing: wealth. But you know what? It's not easy. It's really tough. And we're going to talk about that. But before we talk about that, I want to give you the power of compounding. Again, let's just say an easy idea, $100,000. And you have to have patience. What I give you is that I want you to be trading this for the rest of your life. Like with me, I want to trade my methodology for the rest of my life. I'm not jumping from one strategy to another strategy or one manager to the next when there's a drawdown, because I will promise you, you will have drawdowns. You will have losses. But you know what? If you manage the risk, where you're not risking a heck of a lot per trade and all the other filters that I give you, you stand the propensity to compound money. How important is this compounding money? Simple example. Let's say you start with $100,000. I can tell you over 10 years, you 4 times the money at 15%. I'm going to say this. I did this as a chart. For 20 years, you 16 times your money. 100,000 became 1.6 million. If it was $1 million, it became $16 million. Let's go to another issue. Let's say it's $200,000. And let's say it's 25 years. Here's the number, $6.5 million. This is a chart. You can go to the internet and do a compound interest calculator and see what you get and play with it. Another idea, I invite you to email me. I'm going to give you my details. There was an article in a trading magazine called Marhedge of a gentleman who invested $300,000 in a commodity trading advisor. He went through all kinds of drawdowns. Long periods he didn't make money. But the fact is that $300,000 from, I believe the year was 1994, became worth $18 million. This is the secret sauce. This is what's important. Not the beginning of a trend or the end of a trend, which I'm going to show you how I do the beginning of a trend. And you know what? Maybe your dismay, it's not sexy. It's not rocket science. Or maybe it's not being taught by a guy who went to Harvard or Wharton School of Business. You know what the fact is? I learned what I learned from several mentors. One of them was a dentist. In 1979, he invested a little under $200,000. And put this into context, we did not have computers like we have today. He was doing hand charts. And from those hand charts, he was doing a breakout strategy. Not mine, a Richard Donchian breakout, which I use. Richard Donchian did this, actually, till his death when he was almost in his 90s, for almost 50 years. This is my goal for you. This is what I want to get you to. The dentist compounded money from 1979 till today, went through all kinds of drawdowns, all kinds of durations of periods of time that he didn't make money, yet he stayed in the game, he stayed in the marathon, and compounded his $200,000 somewhere between $17 and $18 million over all of these years. It's not a story. You can look at the article on Marhedge. I will send it to you. And I want you to become a believer. The question really is, okay, so that's well and great. Great, sign me up. But the question is, how do you really accomplish this? And again, I want to say this, it's not easy. And I'm going to show you something that's going to be shocking to you. The majority of the people can't do this. I'm going to challenge you to do it. And if you want to become one of my students, I'm going to be here to help you do it. If you have the mental fortitude, if you have what it takes, the discipline, the patience, the actual methodology is not the issue. We're the issue. Our fear and our greeds. And you know what? This is the reality. If I can do this, so can you, if you really want it. I talked about the dentist. He has a long-term perspective. It wasn't, well, how was last month? How was last year? He understands, you know what I'm going to call it? The Holy Grail. Reasonable returns, time, and compounding money. You must have a long-term horizon. Otherwise, forget this. During your first drawdown, if you quit, you're never going to get to the goal. And unfortunately, people go from idea to idea to idea and lose money. The next idea is, you're not doing this for yourself. You're doing this for your family. You're doing this for your children. And to compound money. You need to understand something. That most of your trades aren't even going to work. But it's okay. You're taking a low-risk bet. You're risking, and I'm going to qualify what that really means, you're buying a breakout. You're going to risk anywhere between 0.5% to maybe 1% of your account size. If you're trading, let's say $100,000, and you're going to risk 0.5%, you're going to risk $500. How many times can you lose $500 that goes into $100,000? A lot. 200 times? How about if you're risking 1%? 1% on your $100,000 account is a $1,000 risk. The trades can't work 100 times and then you blow up. The possibility of that, just doing 50-50, isn't going to happen. The key is that we're managing the risks on all levels at all times. And even when we're managing these risks, the only certainty is uncertainty. I'm going to ask another question. If everyone can raise their hand, tell me, do you have a plan or you don't have a plan? Do you know what exactly you're going to buy or sell? How many of you know how much you're going to buy or sell, even if you know what to buy or sell? How many of you know when to exit with a profit or a loss on that trade? It's like, if you're going to start a business, you need to have a business plan. If you're going to trade, every potential outcome needs to be thought out. That's what a trading plan is. And those are the issues that you need to answer, that I'm here to help you with. I'm going to tell you this very subtly, or maybe it's not so subtle. If you don't have an exact plan, and you don't know what you're buying or selling, or how much of it, or when to exit with a profit or loss, you should not be trading. And if you are, well, guess what? The fact is, you're probably going to be giving me money or other clients money, because over time you're going to lose money, and that's not what I really want from you. What I want you to realize is this is not easy. This is not retirement in a box. That you have to do your work. I'm here to help you do the work. It's mental work. It's doable. Here are my contacts. You can write them down. We can organize a time to talk. You can email me. We can Skype. I'm here to help you. I do one-on-one. I'm going to show you now a chart. We're going to go over to Metastock. Bear with me one second. Oops, that's a weekly. 1 second to make this a daily. Well, waiting for Berkshire Hathaway to open. I apologize, I didn't have it open before. If it doesn't open, I'm going to go to big charts. 1 second. Let me try this. 1 second. Whoops, Latin American. 1 second. Excuse me. Okay, let's close this one. The reason I'm picking Berkshire Hathaway, to give you an example of how tough this really is. And as we know, Warren Buffett, world's greatest investor, right guys? Okay, you can raise your hand, you can agree or disagree. What I want to tell you is about the world's greatest investor. It's very hard to even invest with him. Look at this period right here. And we can put in an overlay of when to buy him or when not to buy him. Okay? Those that want to know when trends start or when they end, you can use a very simple breakout strategy, a Donchian idea, but there's more to it. What I want to get to the point, though, is show you not just when the trends begin, because that's easy. You can buy here, sell here, buy here, sell there, great, simple ideas. But what is the point I want to make? Imagine you got in here. 1996, the beginning of the tech stock takeoff, whatever. You had almost a whole year you didn't make money. Yet Warren Buffett is the world's greatest investor. Let me show you something else that's fascinating. Again, you would have bought here at 36,000. And let's keep this into context here. You had a nice high in 1998, 84,000, 1998. You did not take out that high. The world's greatest investor up until the end of 2003. World's greatest investor. But everyone thinks that, he's the greatest thing. And maybe he is. Well, 2004, okay, world's beautiful again. Took off. 2004, almost to 2007, you didn't make any money. And in 2007, he was at 151 as the high. I can tell you today he's at 89,000. From 2007 to now we're at 2012. The world's greatest investor, if you want to think about it, from 1996, let's say if you decided to go in there, from 36,000, you brought BRKA, and today it's 89,000. Your compounded annual rate of return is a couple percentage points. The point, this is hard. The world's greatest investor didn't make that much money for you. You can do better. A lot better. Let me show you. The way I work is very simple. The idea, you want to buy the strongest stocks and sell the weakest stocks. Last week, these were some of the strongest stocks. You identify them by a rate of change. Hopefully they'll open. Okay, we got this one. Okay. Strange. Weird. Well, let's just forget that one. Let's do daily. Let's see if it shows. Let's look at this one. This is one of the strongest stocks that was in the daily. Let me move this over. This was one of the strongest stocks as of last week. The idea is you identify the strongest stocks. You look for a breakout trade. Simple. Here they come. You're buying the highest high or selling the lowest low. You would have bought this here. Right here, simple. MACD was positive, even though it started to decline a little bit. We had a buy signal here. You would have bought at 59.15, and you would have exited here at 60, depending on the open or the low. Here. Nice little trade. Simple. The ideas that I teach, you identify a universe. What we do is we look, I don't know why this isn't here, let's do like this. You identify all the markets, if it's stocks or if it's commodities, the strongest and the weakest. You want to focus on the strongest. I look at the IBD 50. These are the strongest stocks right in here, as they were of last week. These become of interest. You look for a breakout trade. Pretty simple. You look for the MACD. Preferably, I like the MACD increasing. And then all I do is I put on a trend. There's an article I wrote in 1998 called The Trend Rider. It was written in Stocks and Commodities magazine. It keeps you in the trade when the trade is working. When you go below, you're out. These are the ideas that can make reasonable returns over time. You're going to have many, many trades that don't work. There's only 4 possibilities. You're going to have big losses. Well, we put stops immediately in the market once the trade is put on. Immediately. And we try to avoid the big losses. But the reality is you can have a gap. You can have a limit up move or a limit down move in stocks. The other next reality is you're going to have a lot of trades that are going to have small losses. Again, when you're risking 1% of your account and it's, again, or half of a percent of your account, it's a $100,000 account, you can have a lot of $1,000 losses. Not every single one of them will be that much. Some of them may be less. Some of them might be a little bit more due to slippage. And then you're going to have also some profits, small profits, some rare small profits. They cancel each other out. But then what happens at times, you have trades, whoops, hopefully this will open, like Apple in December. That was an amazing, amazing, amazing trade. A tremendous amount of profit happened using these simple rules. It's not working. Because I think I'm taking too much bandwidth with the, you know what, here, let's just do one more thing. Hang on one second. Let's do it this way. Okay, bingo. Apple, back in December of 2011, somewhere around here, was one of the strongest stocks. It had a big move. You had a breakout trade. Here. You would have been in that trade pretty much up till here. You would have gotten in rough numbers, let's say 400, and you would have gotten out at 600, 50% return. This is the example of rare, big profits. They're not easy. They're not the Holy Grail. The Holy Grail is being consistent, not giving up when you have trade after trade that doesn't work and you have small losses. I'm going to take now some questions, and here, let me start. 1 second. Let's see. Let's see if people have some questions. 1 second. Okay, do you always use IBD for your stock list? Good question. It makes it easier because what I do, I download the IBD 50 every week. I put it into MetaStock, and then right here, I rank them. It's really simple. But there's another issue too. It isn't just I'm always in the stock market, because there's an interesting point that I wrote about in the blog. It's called the death cross, and it's very rare. It's when you can do basically you look at a monthly chart, and you look at a 50-period moving average and a 200-day moving average, a 200-month moving average. When the 50 crosses below the 200, it's rare, and I can promise you it is super negative. And when it crosses above, it's super positive. There was a long period from 1965 up until 1982 that the markets really didn't do anything. Buy and hold didn't work and actually lost money. And this death cross was below. Let's pull up, hang on, let's do this. Hopefully this will come up. And if it doesn't, I'm just going to type, okay, bingo. Okay, this is a daily chart. This is a 200-day moving average. And you can see we've been chopping around, I think, 1 second, make sure. And no, it's a 40 period, 1 second. Bear with me. Yep. Simple rule. When you're above a 200-day moving average, you want to be in the stock market. When you're below it, you don't want to be. And you're looking for the big moves or avoid the big losses. And, you know, like, here you go. You would have missed a lot of this 2008 nightmare. When you're below a 200-day moving average, you're not in the stock market. And when you're above it, you want to be in it. Look at this period. And this period. But then you go through periods like this that are just not fun. Or like now. It's pretty tough to decide where we are. And it looks like, we could be doing the opposite of what people think. We're going to do a melt up instead of a meltdown that people think the stock market's going to crash. So what I suggest is, and I'm going to make it like this. This is a weekly chart. And on a weekly basis, if you close above the 200-day moving average, pretty simple. You want to be in the stock market from here. And if not, every trade underneath it has its own stops. But this is a red light, green light type of idea. I hope I answered your question. Let's go to the next one. Yes, the webinar will be recorded. I'm going to be posting it on YouTube. And again, I apologize for the charts. I was rushing. It's just kind of hectic trying to get everything done. Okay. The rate of change formula, rate of strength. It's really simple. All you're doing is you're looking at, again, I give you ideas, but I want you to put it into your own personality. I use 3 periods, weekly periods. And I give you the formula. It's here. It's not rocket science. Here it is. I look at a 2-week, a 5-week, and a 7-week rate of change, and I average it. Pretty simple. And then all I'm really doing is I'm identifying tactically what I should be looking for. And then what I should be looking for is I'm looking some kind of a breakout. I'm looking at, have all these filters that I give you in risk management filters that I give you to keep you in trade so you can compound money, so you can have reasonable returns. and that you'll be doing this hopefully for the rest of your life. Here's a question from someone if they can copy the PowerPoint. Yes, of course. I mean, I'm here to give. I'm here to educate you. I mean, I'm trying to give you the reality of what it all takes to be successful. It's not sugarcoating anything. It's pretty tough doing all this stuff, but it's doable. I've been doing it for 18 years. On the blog, on trendfollowingmentor.com, in the blog, I posted already the webinar. Not the webinar, the actual PowerPoint. So it's there for you can take it. You can copy it gladly. Do I follow the CRB? No, I do not. What I do is I look at a large basket of commodities for my trading. I mean, again, I trade stocks also, but mainly what I've been doing is commodities. And the reason commodities, it has everything that we touch in our human existence. If it's from coffee, from the first thing in the morning when I wake up, to cereal, to gasoline in my car, to interest that on my credit cards. The fact is, it's every aspect of our life. So I make myself available for every bull market or bear market, like now with corn or with wheat. I mean, I posted that today too. I didn't know if those trades were going to work. I was consistent. I followed my plan. I took the trade, and those trades so far have seemed to work. You don't have to make it this complicated. It's pretty simple. Okay? When you say in the stock market, you mean strictly the ETFs. I don't like ETFs. I think they're synthetic. I think they're going to be a problem. I could be wrong. I want to buy the strongest. I want to sell the weakest. What you can do is you look at 52-week highs, or you look at all new highs. You can look at all new lows, or all 52-week lows, depending on where you are in the market right now. Currently, it looks like we should be long, believe it or not, with everyone thinking that the world, thinks we should be burning. The key point is not to have an opinion. Let the market tell you what to do. You don't tell the market what to do because that's what's going to lose you money. Okay, I said the formula for strength, okay? Individual stocks, it can be anything. It can be stocks, it can be bonds, it can be commodities. It's all the same. The ideas that I teach are robust, that are all markets, all time frames, again, and they have a propensity to work not years, but decades. Well, this is a great question. Do I advocate breakouts or retracements? I do both. I teach both. There's no either one that's better than the other. You want to use a retracement when you miss the breakout because nothing goes straight up. There's always retracements. And I teach you, the methodologies I use to use retracements. They're both good. There's nothing perfect. The only certainty, again, is uncertainty. Commodities. Do you buy Simpson, Stone, Rickman's beta rate of change? That's it. It's based on momentum. And they're normalized. The idea is you want to have the same playing field. But everything, again, is the same. And if it's not the same, it won't hold up in the real world. And this is the key. It has to be robust. Someone's asking how to get a copy of the article in Technical Analysis and Stocks Commodity. All you do is email me. I'll send it to you either tomorrow morning or tonight. Just email me. I'll send you the article. I'll send you the article that I mentioned also on Marhedge about a gentleman who took $300,000 to $18 million. Again, this isn't me talking. This is written in Marhedge magazine of a guy who invested in Hawksbill. And it wasn't easy. He went through long periods of drawdowns, but he knows what the Holy Grail is. Reasonable returns, time, the power of compounding. 18 million is a lot of money. Oh, can I show the formula again? Gladly. 1 second. I can even email it to you. Just ask me to email it to you. Again, I really stress to you, this is not about magic formulas or indicators. It's a combination of using robust ideas, putting them into a plan, following the plan, having the mental fortitude to get over the periods you have the drawdowns and the long periods you don't make money, like I showed you with Warren Buffett. And that's what I'm here for, if you want me to be. Let me look at the next question, and then we're going to have to wrap this up. Okay, I got a thanks. Can you describe? All I'm really looking at is a simple idea. I mean, again, you can do an internet search on rate of change, but you're comparing 3 periods, averaging them to get one number. So it becomes a baseline to compare, again, let's say stocks or commodities or whatever, to know what is the strongest and what's the weakest. You're measuring velocity. Let's see if we have any other questions. Okay, this webinar will be recorded. Yes, I said it will be recorded. I'll try my best. Wrong ticker. Yeah, I was rushing. I apologize with Apple. I don't know what. Okay, case being PFG, I don't really understand. If you did well in trend following, but if your broker failed, then all your money will be gone and useless. Okay. What I do, and this is what I suggest with you, it can happen with a stockbroker. It can happen with your bank. It can happen anywhere. I leave only margin plus in the account. I'm trading $300,000 accounts. I have 2 of those in my own trading and a $150,000 account. The margin on the $300,000 account is pushing $50,000, $60,000. That's it, maximum. I'm even trading, I even keep less than that in there. I live another day. The question is, you know, we need the regulators to do their job. And it's extremely unfortunate that they've allowed fraud with MF Global and PFG. But this will end. The only way to do it is to leave margin plus a small amount of money. And this can happen in your stock account. And don't think you're so safe either with SIPC. Because by the time they might bail you out, could be years or decades. There is nothing safe at this point, in my opinion. I don't even think treasuries are safe anymore. You have to spread it out. Also, spread out the number of brokers you have. I have several brokers. I'd suggest you do the same, that you can liquidate at any one moment. And you don't wait to liquidate. You don't ask them, you know, transfer the positions. Get your money out that day. What I also have done is I've set up Google alerts for every broker that I use. I'm watching everything. There was one broker, and they were wonderful to me, great, great people. But their stock hit a 52-week low. I closed out my positions with them. I didn't feel comfortable. So we have to be very aware that we never have. Okay, let's see if there's any other questions. Okay. Everybody, I want to thank you. It was great. If I can answer any more of your questions, I'm here to help you. Again, I apologize a little bit with the delay in Metastock. I was rushing. And again, let me know how I can help you and what I can, what I can do to, help you succeed over time. The Holy Grail, reasonable returns, time, the power of compounding. This is what it's all about. Thank you very much. Look forward to talking to you.